As for how changes were made in the past, that's evolved over time as Bitcoin grows. And that's actually also a reason for why we did the paper is because the network now is somewhat different than it was even back in 2017 when there were more, disputes around soft forks and hard forks. The
Mhm.
network's kind of evolved since then, so we wanted to kind of recheck how a lot of this might function or kind of analyze some of the risks and pathways we've seen. So back in the really early days,
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. Lyn Alden recently offered a critical assessment of the current market landscape, emphasizing the downturn in conventional assets like gold and the prospective emergence of Bitcoin as a credible alternative. Alden identifies the decline in gold prices as a result of multiple significant factors, such as a robust US dollar, rising interest rates, excessively optimistic inflation forecasts, and a generally negative market sentiment. The observed trends indicate significant apprehensions regarding the global economic environment, particularly as the assertive monetary policies of central banks may intensify inflationary pressures and result in currency devaluation. Alden posits that conventional assets, often regarded as secure refugees amid economic volatility, might not provide sufficient safeguarding in the current shifting financial landscape. The ongoing monetary expansion by central banks to achieve inflation objectives has the potential to escalate uncontrollably, particularly in sectors such as healthcare and education, where significant price surges are driven by constrained automation and elevated demand. Consequently, there is a growing trend among investors to explore alternative investments that can protect their wealth from the effects of monetary erosion. In Alden's assessment, Bitcoin emerges as a viable option for mitigating inflation risks. The fixed supply of 21 million coins presents a significant contrast to fiat currencies, which are subject to unlimited expansion. The limited supply of Bitcoin presents a distinctive value proposition, akin to digital gold, attracting investors who are interested in assets that remain insulated from dilution due to monetary expansion. However, Alden warns that the future of Bitcoin as a dependable store of value remains uncertain. The success of this initiative is contingent upon widespread adoption, market confidence, and its capacity to meet genuine economic demands in a highly volatile landscape. Alden highlights that dependence on conventional assets, including shares from well-established firms like IBM, could subject investors to considerable risks. Companies could face challenges in maintaining their market share and adjusting to evolving economic conditions. Alden recommends that investors explore the diversification of their portfolios by incorporating assets such as Bitcoin, which may act as a safeguard against inflation and currency depreciation. Nonetheless, the critical factor for Bitcoin's sustainability will be its capacity to uphold market dominance and address tangible economic challenges. And lots of things Lyn Alden discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
sure. So a hard fork is a change to the network that is not backward compatible with existing nodes. And a really simple example is increasing the block size. So if there's a block size limit that all the nodes enforce, and you come out with a new client that says, let's increase that. Let's double the block size or quadruple the block size. Your new type of node would say, okay, these bigger block sizes that miners are putting on the network, these are valid. Whereas the older ones are saying, no, these are over the limit. They're not valid transactions, so they don't get added to the blockchain as far as we define it. And so you have a split. You have two different coins at that point, and the entire history of transactions up until the split are the same. And so any holder now has both sets of coins. And if it's a very minor hard fork, I mean, I could hard fork Bitcoin right now, and it wouldn't matter because I'd be the only one that knows about it. But if there's a significant dispute where a lot of people, for example, want bigger block sizes and a lot of people don't, then you actually have a fairly economically significant hard fork. You have two different sets of coins, And if someone's not really sure which one's going to win, they can just hold both. And eventually the one that loses will kind of reabsorb its monetary premium back into the one that wins. Or if someone is highly convicted about which one is either likely to win or ethically should win, whatever the case may be, then they can sell the coin that they don't agree with and use it to buy more of the coin they like. And that helps determine also for their own benefit how they perform and then also what happens to which coin wins. Um, and a soft fork is a backward compatible change. And that's, like what we know as Bitcoin today has gone through multiple soft forks.
Hmm.
And that's a narrowing of the rules. So it's something that says it meets all the prior rules, but then there's also some additional rules or details that it's following. And an example would be if you wanted to reduce the block size, because if you reduce the block size, you're still meeting the older rule set because you're
Mm.
still under the prior limit, but now you're even below a lower limit. Um, and so that's not an example that's happened, but that's like an easy to conceptualize example. Um, and then as for how changes were made in the past, that's evolved over time as Bitcoin grows. And that's actually also a reason for why we did the paper is because the network now is somewhat different than it was even back in 2017 when there were more disputes around soft forks and hard forks. The
Hmm.
network's kind of evolved since then, so we wanted to kind of recheck how a lot of this might function or kind of analyze some of the risks and pathways we see. So back in the really early days, it was literally as simple as Satoshi made an update. Like that's how soft forks and sometimes even hard forks were done. It's just like, the network was so small and he would just be like, hey guys, I updated it. So everybody change your node now. And they'd be like, okay. And it just, that's kind of the year one of Bitcoin. It's not particularly decentralized at that point, even though in
Hmm.
theory the network is ready to be. It just takes time to spread. And then after several years, it starts to actually be challenging. That even Satoshi himself wouldn't be able to just convince everyone like, hey, okay, here's what we're going to do now. There'd be significant parts of the network that would be like, I don't want to do that change.
The recent increase in Bitcoin prices, reaching a new all-time high just under $77,000 on Bitstamp, aligns with the Federal Reserve's recent decision to reduce interest rates by 0.25% after its latest FOMC meeting. Chair Jerome Powell emphasized a measured perspective on inflation and employment, recognizing advancements towards the 2% inflation goal, while indicating that economic activity remains robust. Although there has been a marginal uptick in unemployment figures, the overall rate continues to be low, contributing to a positive sentiment in the markets. Analysis from the CME Group's FedWatch tool indicates a likelihood of a 0.25% rate cut in December, aligning with market expectations for ongoing monetary easing. However, there are concerns that this shift may be jeopardized if long-term inflation expectations, presently at 2.1%, start to increase. The Kobes letter underscored that a rise in inflation expectations could disrupt the Federal Reserve's strategy, illustrating the fragile state of the existing macroeconomic landscape. In light of prevailing macroeconomic uncertainties, Bitcoin has shown notable resilience by achieving its highest daily close to date. The asset has experienced an 8% increase month to date, alongside a notable 19.6% rise in the fourth quarter, as reported by CoinGlass data. The observed price movement is underpinned by robust liquidity present on both sides of the spot price within exchange order books, suggesting increased market engagement. Nonetheless, given the heightened levels of leverage, certain traders are cautious about the possibility of a market correction. Market analysts are forecasting a potential short-term increase in Bitcoin's price, followed by a likely correction, especially in light of the elevated leverage levels observed in trading positions. It is recommended to monitor the critical support level at approximately $72,600 in the event of a market correction. A breach of this magnitude may result in a shift in market sentiment, which could subsequently heighten selling pressure. Price movements of Bitcoin have been supported by the Federal Reserve's accommodative approach. However, it continues to be susceptible to changes in the macroeconomic landscape, especially concerning inflation expectations. As we approach 2025, the relationship between Federal Reserve policies and Bitcoin's market dynamics is expected to persist in influencing volatility. This scenario offers a mix of potential gains and pitfalls for investors, indicating that a prudent approach is warranted given the prevailing high leverage conditions. Maintaining or decreasing exposure could be a wise strategy until more definitive indicators regarding inflation and the Federal Reserve's policy trajectory become apparent. Let's get back to Lyn Alden interview.
Ecosystem all the time. Someone's a doctor and they hold some Bitcoin, and they don't read or think about Bitcoin on a regular basis, and they might just be unaware whether there's a debate around a soft fork or not. And so we analyze that it's really the ones that are on the ends of the spectrum that are most impactful for the success of either a soft fork or a hard fork compared to the original network. And so we separate into 6 categories, and there's 2 that are in for it. There's one that's very much in for it, to the extent that they're willing to expend resources and time to increase the odds that that change happens. The next one down is that you're for it, but you're not. You're kind of passively for it. You'd prefer that to happen, but you're not really on the front lines, trying to make it happen. Then on the other end of the spectrum, there's people that are fully against it, and they're willing to expend resources to try to prevent that change from happening. The one next to that is that you're generally against it, but you're not maybe losing sleep over it. You're not willing to expend resources to make sure it doesn't happen, even though you prefer it not to happen. Then we have 2 in the middle. One of them is that you are aware of it and you're neutral. You don't really have an opinion either way. And then the other one is that you're neutral because you're unaware. You literally don't even know that this is being discussed, or maybe you heard of it and don't even know what it is. You don't really care, or maybe you would care if you knew, but you just don't know because you're not living and breathing in the Bitcoin ecosystem all the time. And so one of the goals of the paper is to kind of pull more people if possible outside of that middle category, especially because you can have potentially pretty large entities that are not kind of closely following this on a day-to-day basis. And so, yeah, those are the 6 categories that we broke down, because obviously, if the majority of entities are probably going to be somewhere in the middle, where they're just not following this regularly, or they follow but they don't really have the bandwidth to have a high conviction opinion. Whereas those polls are really what make changes either happen or get stopped from happening.
On November 7th, BlackRock, the largest asset manager globally, experienced substantial inflows of $1.1 billion into its spot Bitcoin ETF, coinciding with Bitcoin reaching new all-time highs close to $76,900. The recent increase in inflows follows a 2-day period of outflows, amounting to $13.3 million, highlighting a significant change in investor sentiment in the aftermath of the U.S. presidential election. According to data from Farside, BlackRock's ETF represented around 82% of the total $1.34 billion in inflows for all U.S.-listed spot Bitcoin ETFs on that particular day. The Fidelity-Wise Origin Bitcoin Fund recorded inflows of $19.9 million, whereas the ARK21 Shares Bitcoin ETF attracted $17.6 million. This data underscores the significant lead of BlackRock's product in drawing investor attention amid the current surge in market activity. The interpretation by market participants indicates a robust bullish signal, primarily fueled by anticipations of heightened Bitcoin demand in light of a favorable regulatory landscape under President Donald Trump's administration. The recent electoral success of Trump, coupled with his established pro-cryptocurrency position and the anticipated regulatory shifts at the Securities and Exchange Commission, SEC, has fostered a positive outlook regarding the future trajectory of Bitcoin and the wider acceptance of digital assets in the United States. This trend has garnered attention from financial analysts and commentators. The crypto trader known as the Bitcoin Therapist projected ongoing substantial inflows, characterizing the trend as pumpember, a term that cleverly combines November with the anticipation of persistent price escalations. Eric Balchunas, an analyst at Bloomberg, highlighted the remarkable volume, indicating that it represented the largest single-day inflow ever documented for any Bitcoin ETF. He pointed out that in the initial 20 minutes of market activity on November 6th, BlackRock's iShares Bitcoin Trust, IBTC, experienced approximately $1.1 billion in trading volume, indicating a significant increase in investor interest immediately following Trump's electoral victory. Traders are anticipating inflows driven by institutional demand and retail interest, positioning Bitcoin ETFs as a crucial vehicle for market exposure. The significant inflows into BlackRock's Bitcoin ETF reflect an increasing investor confidence in Bitcoin, positioning it as a hedge against macroeconomic uncertainty and a strategic component within diversified investment portfolios. The current trend is likely to gain momentum as market participants expect beneficial policies and enhanced regulatory clarity with the new administration, which could pave the way for an additional increase in Bitcoin's price rally. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.